welcome back to my channel. So I saw something nice on USD CAD yesterday. So a very nice trade. It's about the 9 a.m. CRT mode. So if you haven't watched the previous video, you can do it to watch it if you want to have a better understanding about this particular strategy. It's actually a nice strategy that can make you money from this market, this trading. So you don't need to complicate things, just back test it for test it so that you can have a better understanding. So I have the trade here yesterday. Let me just show you how the trade look like so that you can learn one or two from the setup. In case of another time you will see something like this. So okay, let me clear this chart so that I can just okay. Now according to the guidelines I gave in the first video, say you have to mark the 8 a.m. candle, the high and the low of the 8 a.m. candle, and then you go to 5-minute time frame to look for a breakout. So if you have a breakout on the downside, you have a breakout here, so we must have a close back inside the range. That is, we look for a breakout and a close back inside the range like this. Immediately price sweep the low, so we need a close back inside the range. Then after the close back, according to the guidelines I gave, we go to 1-minute time frame. So on your 1-minute time frame, what are you going to look out for? Now you look out for a swing low being created. Since you are trying to buy up, you wait for a swing low to be created, and after the swing low has been created, you wait for price to sweep the swing low and then create a break of structure. So price must break structure to the supposed direction. That is, after sweeping the swing low, after sweeping the low, that serves as the liquidity, that will serve as liquidity sweep. Then we wait for a break of structure to the supposed direction. That is, if you are trying to buy, the price must break structure to the upside. While if you are trying to say, the price must break structure to the downside. Now here we are trying to buy, to wait for price to create this the liquidity, that is the swing low, and then for price to come back to sweep it. So this is the low, the candle low. Yeah, so I think we have a swing low here which serves as a liquidity. So on the price, if all these criteria are not met, we don't have any trade. Do you get it? But if you can follow diligently those criteria that I listed, and if you see it inside the market on chart, then you can take your trade. Definitely you can take your trade. So as prescribed earlier, so after your trade reach the 50% of your target, you can take partials and you leave the rest to run for the day. So but that 50% is very, very important, because sometimes price might reach the 50% and then repriced to the other direction. So let's wait for price to sweep the swing low, and then we have a break of structure to the upside. Okay, now we have the sweep of the swing low. Now we wait for a break of structure. Now immediately price break here, we'll have a break of structure to the upside. So we wait for price to break here. Okay, yeah. Now when I saw this yesterday, this momentum yesterday, in fact I thought price was not going to come back to pick this, to sweep this swing low yesterday, because I see price breaking structure again to the upside again. And then when price was coming down with this full momentum, I thought, oh, this was going to this setup was going to be validated. But immediately I saw price, because of this fair value gap. So I was expecting price to to test this fair value gap and then to continue probably the bearish trend that is forming. But then I saw that price actually disrespected this fair value gap and then gave us a break of structure. So all our criteria are met. Then after this, you should know as a trader, immediately if fair value gap is disrespected, a retest of that place will be your entry. A retest of that fair value gap is going to be your entry. So our target, so I place my trade here, and then my target was the eye of that candle, right? That's our target. So our target is the eye of this candle here. And then my stop loss was a bit below here, something like this, something like this. So and then like this, yeah, like this, and then price tagged us in. Now we use the fair value gap in this place because anytime you see price create a fair value gap and then price, we're supposed to use it to continue the trend. Immediately you see price disrespecting it, you should expect price to what? To come back for a tap, to come and retest it, and then before continuing the trend. So that's what I waited for. Immediately I saw it yesterday, I said, okay, wow, now this a good trade. Then the retest of that fair value gap, and then we have the trade yesterday on USD card. We have the trade yesterday on USD card. So you should take note of this. Sometimes you might not see a kind of structure that you expect. That's why you have to be flexible about your trading. You have to be flexible. So immediately I saw this yesterday, I was not expecting price to come back to the apex. Do you get it? I was not expecting price to come back to this apex here, down here. Immediately I saw this fair value gap being validated and inverse fair value gap has been created. So I make use of this fair value gap here. The disrespecting of this fair value gap, I make use of it yesterday as my entry, and then we have the trade yesterday. So that's that about that. So if you haven't watched the previous video, you can do it to watch it so that you can have a good understanding of this concept. It's very, very simple. It is very, very simple. Very, very simple. Very, very simple. So you can just back test and for test it before trying it on your live account. Do it to give these videos a like so that others can have access to the content. Thank you very much.